Hey, good morning, options traders, and happy hump day, everybody. And I wanted to talk a little bit why technical analysis on option prices is so dangerous. Now, don't confuse this to mean that you can't use technical analysis on the underlying stock and therefore use that to assist with your option decisions. I'm talking about charting the actual option prices. And the reason I bring that up is that, especially a number of years ago, a lot of brokers used to push this out as a marketing gimmick, similar to level 2, as if you had some kind of inside information. And they would say, oh, we allow you to chart the actual option prices, as if it gave you some type of an edge. Well, not only does it not give you an edge, it's probably going to lead you to false conclusions. So let's go find out why technical analysis on option prices is so dangerous. And before we do, as always, please be sure to click like and subscribe. It's very much appreciated and helps so much to promote the channel. So the whole basis for technical analysis is that it's based on historical patterns. And so yes, we want to see very long periods of history. We're going to look for things like support and resistance. We could look for trend lines, but again, they take time to form. Well, if you're trying to chart a short-term option, these contracts aren't alive long enough to form patterns. If you've got a 30-day option, in 30 days, that entire history is gone forever. If it's a 90-day option, you're going to have 90 days of patterns, and that's it, and then it all gets erased. See, that's not true for a stock. Now, also for options, there may even be days with no volume. So you can get these funny gaps in there, and the candles might even be fairly small just because even on days that you do have volume, there's just not a lot of trading, not a lot of price action. So it just doesn't give you a lot to work with in terms of technical analysis. So for example, in the E-Trade platform, I've got Amazon up here. And of course, if we click on chart, you are charting Amazon stock. And you can see we've got a very long history. If we go back this way, we can get lots and lots of history. We don't get any missing days, days that it just simply didn't trade. Sure, you'll get some days that you'll have some fairly small-bodied candles, but you're not going to find a single day where it just simply didn't trade. But watch what happens when you chart the option prices. So let's go back over to options. And the way that you do that in E-Trade, the stock is trading for just about 91. Let's take a look at the 90 strike. And if we want to see the history of that, you're going to come to this icon all the way at the far left mouse click, and then over here it says chart. And what that means is that you're going to get a chart for this particular option. It's telling you right here. This is the December 16, 2022 $90 call. So watch what happens when we click on chart. And so there it is. Doesn't look like a stock chart at all, does it? You can see there's some days where it doesn't trade. There's other days where we have just these very small-bodied candles, but it's very hard to try to figure out any type of a pattern just because there's so little information there. But despite all of these problems, there's an even bigger danger for using charts like this to try to do your technical analysis. So what is that? Well, for that, let's jump over to an Excel spreadsheet. So here's an Excel spreadsheet, and what I've done is I've just made up some stock prices. I'm looking for a period of 30 days, and we're allowing the stock to move from 100 to 105. It's just going to rise $1 a day for 5 days, and then it's going to decline $1 per day for 5 days, and it's going to rise $1 per day for 5 days, and so on. And so when we chart this column, no surprises there, you're just going to get this zigzag pattern. It's going to go up to 105, back down to 100, up to 105, back down to 100, and so on. But I did this just to show that we've got this nice clean resistance point up here at 105. We've got this nice level of support down here at 100. And that's what you would expect to see based on the way that the stock has been performing. But now in the next column, we're going to look at the $100 call. So back when the stock was 100, we're assuming that you bought the $100 call with 30 days. 1 day later, I'm using a pricing model to say what is the option worth with the stock at 101 and 29 days until expiration. There's your answer. 1 day later, there's 28 days remaining on it. What's the option worth with the stock at 102? There's your answer. So if we plot these, a lot of traders would intuitively think, well, it should have the same pattern as the stock. After all, it's a derivative. And this is really the biggest danger. So watch what happens. We're going to drag this over, And there we go. Look at that. See, we're no longer seeing support and resistance as being a flat line. We're getting a very strong downtrend. What's happening? Well, it should be fairly obvious. As time is passing, the value of the option is dropping. And so even though the stock is really just going dead sideways, you're going to be led to believe that it's in a downtrend. Now, of course, we could complicate this even more. I could take the same information and I could make this graph go up just by changing the volatility. So what if volatility actually got pumped up on this date? Well, the options price might be up here, even though the stock's price is the same. And so we can get all kinds of graphs on exactly the same stock prices, but because it's an option, we can get very different patterns. The two main reasons are, number one, that time is absolutely going to pass, and that means we're going to see time decay. And number two, we're most likely going to have volatility change. In today's markets, we could also have interest rates change, and that can also change the option prices. But the main thing I want you to see is that for anybody who wants to go and chart the actual option prices, thinking that they're getting some kind of a big benefit or insights, it's a dangerous practice, because as you can see, you can be led to get exactly the opposite conclusions. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.